All right. Good morning. Good morning. It's Will B back with the Blacksmith podcast. I don't seem very energetic today. I was in the bed this morning. I didn't go to the gym and do my usual thing, but it's me. It's me live in the flesh. Today we're on our Saturday financial topics. So let's just go over a review. We've talked about a myriad of things in the last couple of weeks, right? I just closed out the window, but I had up here in my windows, I had the Dodge Charger that I did the financial calculator on, and the $1,400 a month payment. We've talked about vehicles being the number one wealth killer. Um, Pretty much extensive shorts on that lately and stuff like that. But we've talked about the difference between being rich and being wealthy. The main difference is a rich person is a high earner, but usually has a high consumption lifestyle to go with it. In my reading of The Millionaire Next Door, um, they talk about this a lot, how high consumption lifestyles leave you broke at the end of it, because as soon as you stop your high earnings, your high consumption is going to take you right down the drain. And so people earning $200,000 to $300,000 a year, most people would say, oh, they would ask, how are they broke? They're broke because they raise their spending to their lifestyle. There's an Amazon package at the door every day, two or three of them maybe. They can't go a week without ordering something. They new cars. Let's just talk about it. Cars are always. I mean, I'm telling you, bring me to the place where you reside. Show me your parking spaces, your garage, your driveway. Show me your living room. Show me your closet, and if you have a separate one for shoes, show me that, and I will show you 80%. I will show you where your wealth is going. I guarantee you 80% of the time that is going to be true. Some people spend on vacationing and stuff like that, which we haven't actually talked about. Maybe we'll talk about that a little bit, what the average vacation cost and where. But I think nowadays the number one issue plaguing the average person is social media. Being on social media and comparing your life to other people's lives. Oh, they went to Tulum. I want to go to Tulum. Well, you know what? They make 10 times the amount of money that you do. They're rich. They're at least rich. So you could say from a rich standpoint, they can afford it. But sorry, I don't want to put this on camera. But you could say they could afford it, but you earn $50,000 a year. You shouldn't be going to Tulum. But social media and the social pressures of what you're not doing that you perceive everybody else to be doing, it's just the call is too great. And so we go ahead and say, screw it, throw caution to the wind. What do? We don't pick up our debit cards. We pick up OPM, other people's money. We pick up a credit card, something that we have to pay back. And a lot of times it's not even a rewards card. And if it is, it's not a good one. It's not a travel card. So you're already losing spending other people's money that you don't have, that you're going to have to pay back. And the interest rate is probably already high. But then you're not even getting the best perks out of it because it's not even a travel card. So then you're going to go off to Tulum 3 to 5 days. You're going to go enjoy yourself and post pictures on Instagram. And, you're going to have this little fun, which it's just another little dopamine hit. And that's what people live off of, is the next dopamine hit. It's like we're all addicted to social media, to comparing our lives with other people's, and we're all addicted to something invisible, the next thrill, the next excitement. And it's just another little dopamine hit. It's not anything long term. And we tell ourselves that the long term, the state of joy is boring. But you know what? Happy is the short term burst. And that feels so great. So I'm going to go towards happy. And if something's not making me happy, I'll leave it, I'll turn, I'll go to the next thing. And this is why people buy new cars. When their car works, this is exactly why people buy new cars. When they have a working car, this is why people get a bigger house. When their home was big enough, they were in an apartment and they were able to save money, invest money, and it was all the home they needed. They had to get a big house. Everything has to be big. Everything has to be luxurious. Everything had to be expensive. When 30 years ago, people living this way right now, the society of 30 years ago would have looked at them and told them they're crazy because you're not rich. You don't earn this amount of money. What are you tucking away for retirement? People spoke like that. And now retirement is the least of people's concerns. And there's going to come a day of reckoning for everyone, right? Where retirement is going to be more than on the horizon. You are going to be in home stretch for retirement, at least age wise, the point at which you no longer want to work. And then it's going to be right there in your face. And I think we're going to have a whole generation of people, probably two of them, maybe Gen X, part of Gen X, most millennials, uh, well, they would hit retirement before us, but millennials are gonna hit that retirement wall pretty hard, I think, because a lot of us grew up without internet, or we didn't have it when we were born. Well, the younger millennials had at least dial up. Um, but we all, social media came out and we all just flocked to it and we all act like we were zennials and were just totally obsessed by it. And so anyway, I think people threw caution to the wind and we're just living off that next dopamine hit, that next high. And so it's a drug that's got us all addicted. But what is the drug? Is it attention? Is it is it never being satisfied? What is the drug? That's really the question we have to figure out, because whatever it is that we're addicted to, we're never satisfied. We're always looking for the next high. We're always buying too much, saving and investing too little. Um, and people will blame the system, whatever that is, the man, whoever that is. They want it this way, whoever they are. But really and truly, when you really bust it down to who's at fault, it's that person who is living their own life, that person who's in the driver's seat. Because when they decided to go to Tulum, they looked up, they heard about Tulum, they looked it up, didn't even know where it was, saw that it looked good, researched hotels, um, and they figured it out. They figured out how to get the money to go, whether it was in their debit account, whether it was in their shoebox, the wall, a hole in the wall, I mean, their vault, their safe, whether they went diving in the Scrooge McDuck's bin and grabbed out a bag of money. They found it and they went. And they spent money while they were there. And they came back. And guess what? Reality was still there. Now you're broker than when you left, and your situation is made worse. So Let's see what else we have up here. What else did we talk about? We talked about the meaning of broke. This was that auto loan calculator. I updated it. It had the I think all I did was change the amount. In fact, I think I remember what it was. Something like this. And then I didn't change anything else. And then yeah, look, there's the payment right there. I think it's like $2 off, but that was the Dodge Charger, right? The Scat Pack or whatever it was. I had looked up Investopedia, how much income puts you into the top 1%, 10%, whatever. I've done credit breakdown before, the 35, 30, 15, 10, 10. If you don't know what I'm talking about, it's right here. 35% of your credit score is your payment history, 30% is the amount that you owe, 15 is the length of credit history, 10% new credit, 10% credit mix. So 35, 30, 15, 10, 10. It's just five parts of your FICO score. And your FICO score will range from 300 to 850. Yeah, like I said, I'm not. I can hear it myself. I'm not my usual peppy sounding self, but the knowledge will still be the same. And here we even cited this that most lottery winners are broke in 3 to 5 years. That's all it takes. One of the more fun topics that we talked about was what you would do with $1 million. And the way you would handle $1 million tells me how you would handle lottery winnings. It'd be very telling to hear what you would do at $1 million. And so most people would rush out, buy a $500,000 house, then they would get $100,000 car, probably two of them. Then the family would find out that they had $1 million. Mama, daddy, niece, nephew, brother, sister. They would figure out they had $1 million, or or the person who won the $1 million or got the $1 million would go to them because they already knew of a pre-existing financial dilemma or something they had, and they would go to them and give them the money. Now, when all is said and done, they have between $100,000 and $200,000 left. And now you know what they do with that? They try to put it in the bank or they learn to invest. They probably just throw it in a savings account and they work less at their job. They don't continue to work the amount of overtime they were working because they have this money they fall back on. And in a couple of years, they whittle it down to nothing. It's not, they don't hold on to it and clutch it when there's $10,000 less left over as when it was $1 million, right? It's like you want to hold on to the remnants of that, but you didn't hold on to it quite as much when it was a million. So that's one of the fun questions I've asked over the last couple of weeks was what you would do with $1 million. And listening to people's answers on social media, that it's just been funny. Um, kind of, because some people got funny with it. Most of it's not funny. Some of it's actually scary. I would say most of it is pretty scary because the level of financial literacy out here in the world is just extremely low. And so it's kind of it becomes sad after a certain point. But that was my prediction. Most people with $1 million would they run to buy a $500,000 house. Now let me break down my hypothesis, right? And I bet you for 80% of people, I'm correct on this. But most people with $1 million, just $1 million, first and foremost, Corey, one of the guys that was on last week, and he was talking, and he gave his financial journey and how he's only 24, but how he began investing and whatnot. He said something very telling. He said he would sit on it for at least 6 to 8 months because he wanted it to actually sink in that he had $1 million. And if he didn't sit on it first, what would end up happening was that he would be like anybody else, spontaneously running around buying stuff, just grabbing three of these and two of those and 18 of those because he could, right? So sit on it for 6 to 8 months and really let it sink in mentally that this is $1 million. And I really need to figure out something smart to do with this before I go and spend this on something dumb. And I told him, though that's not what I would do with it, I think being 24, being most people's mindset of spend it before you get it, um, or like most people's mindset of the mission with money is to spend it. That's the objective, right? I said that is a very keen take on it. And he said during that time he would learn how to invest it. So I thought that was very, very telling. But anyway, let me break down the hypothesis I had. So with $1 million, most people go run out and buy a $500,000 home. Now, the breakdown of it is this. That was the hypothesis. The breakdown of it is this. You only have $1 million and you just spent it on half of it, 50% of it on a home. And I guarantee it's more home than you need. I guarantee it's more home than you're even really going to use. But you spent $500,000 on it because it was a big house. Everybody says, I need a big house. No, you don't. No, you don't. For most of you, you know what would work? A boxable unit. And I am not trying to get you to buy a boxable. Um, I'm an investor in boxable, but it hasn't IPO'd yet. Um, I'm even a affiliate marketer of boxable. I need to start posting my link. But this right here, honestly, most of y'all are probably single. Most of y'all probably don't have any children, and you're not looking to have any children or get married in the next 3 to 5 years. So you know what? You see my screen? This is all you need. This is as much house as you need right here. And it's so crazy. I say this half kidding, but not really. Look, this casita, right? 361 square feet. You hear it and you cringe like, oh my God, I could never live in something so small. 361 square feet. I mean, 3,000 square feet. Well, that's what my house is. But I've been in the Navy 17 years and I have a wife and 6 kids and it's 5 bedrooms and 3 baths. Um, I kind of need more house than this. You get what I'm saying? So, like, let's just be real. Most of y'all could live in this and actually be comfortable. But as I talked about at the beginning of this, if you're just joining us, we're all hooked on some kind of drug out here, especially in America nowadays. And I can't for the life of me figure out what it is. Is it attention? Is it comparing our life with someone else? Is it worrying about too much what people think? This idea that everybody can see me when I step outside and what I'm wearing, so it must be fresh to death. This idea that what I'm driving is not new enough for everybody's approval. Everybody that I don't even know, and 98% of them I'll never even meet. Let's go 99.9 repeating percent of people you'll never meet in the world, period, who lay eyes on you. So, I mean, think about it. You're rolling past people at 30, 40 miles an hour. You're not stopping to meet everybody. Um, Hold on, what we got in the chat? Yeah. So The chat's already going off. Misty. So Misty, one of the stocks I showed y'all before. I'm not. How do you spell this thing? TY, right? Yeah, there we go. Yield max. So this one, I noticed that the dividend was changing quite precipitously, and I noticed that the dividend was super, super high. Uh, but if you look, the equity loss has been tremendous recently. And I think this one only paid me about 1,500. So I'm down about 2,500 in it. Um, I could get out of it. I could let it pay me another 1,000. I'll see where to go from there. But hey, look, I'm not just telling y'all about investing. I am doing it myself. Um, and it did. When did it? When did it pay me that 1,000? It's somewhere here. I think it was this month. Here it is. So it paid me the 1,000 last month. So I could keep it for 2 more weeks, get another dividend, pop back out of it, or just let it ride and see where it goes. But the chat is already talking about that. So this is why I actually push you guys towards Orchid Island Capital, because the dividends are at 20%, and the equity is holding more steady than that. It is down 9% for the year, 13 in 1 year. It ain't looking so good for the 5 year chart either. But what I was doing was dollar cost averaging down in it, and it's much easier to do with a lower buy-in, right? So I was buying $15 a week with this one. So my dollar cost average in this was always going towards the current price and still getting 20%. And I think that's the way to do it to meet um, your goal of, if you're just trying to beat inflation, you're more than beating inflation. I know we just went a totally different way, but be that as it may, um, to go back to what I was just talking about, though, the big house, I think we beat that one to death, right? So the casita, 60 grand, probably run you, I don't know, $700 or less on a loan every month for where you live, right? Some people paying triple, quadruple, quintuple. I don't know what's five. I don't know, but that right there is going to make you broke. And then when you couple that with the fact that now they're going to go buy an expensive car, probably $100,000 car or near it, or two of them, and go ahead and spend another 200,000 or 150 on just two vehicles. Look, it's just a vehicle. It gets you from point A to point B. Um, we have to start seeing things for what it is. Um, Especially young people, right? Young people, and it's just a lack of teaching. Young people, I don't think they spend a lot of time at home. They like to be out and about and mingling and talking to folks, and that's fine. But then why do you need a 1,000 foot apartment? You don't need a 1,000 square foot apartment. And it's just seeing things for what it is. They need to ride in a Jaguar when they work 5 miles from home. Get an e-bike. You don't even have to really pedal. Get an e-bike. You know? Um, I get it when it's raining. Yeah, but I mean, you live in Arizona. Get an e-bike. I'm just making stuff up at this point, but you get what I'm saying. Like, some people's lifestyle does not even support their action, and we've got to be more deliberate about this. Um, okay, so we got Corey in here. Uh, who knows him and invited Amir Waddell to the group? Me, I do. Are you familiar with who he is? I know him. I met him in real life. It was Memorial Day. I was doing a Memorial Day. What was it? Lieutenant Murphy salute workout. That Murphy workout. It was a workout regiment that Lieutenant Murphy did. Lieutenant Murphy is a famous Navy SEAL. He ended up passing away a couple years back when his unit got pinned down over in Afghanistan. They made a movie about it. It was called, I think Mark Wahlberg did it. Maybe not. Uh, it's one of those SEAL movies where they got pinned down in the woods and they called in the airstrike. The Chinook came and they shot the Chinook down with a RPG. It fell to the ground and like blew up and no one survived. Lone survivor. Lone survivor. Uh, so that's the movie about Michael Murphy. He's not the one who made it out alive though. But the Murphy workout is pretty intense actually. You start by doing 100 pull-ups. No, I'm sorry. You start by doing a run, a 1 mile run. Everything I'm about to tell you, you do this for time, right? You're supposed to time yourself and get faster every time. So you do a 1 mile run, and then you do 100 pull-ups. Now you're not supposed to do anything else before you complete these pull-ups. And then after you do the 100 pull-ups, I just normally do 10 sets of 10. Then you do 200 push-ups. And you're not supposed to do anything else before you finish these. I just do 10 sets of 20. And then you do 300 squats. Not supposed to do anything before you do finish these squats. Um, and it's in this order actually. And I do 10 sets of 30, good to go. And then you do another 1 mile run. So I met him when I was over at my wife's spin gym. That's where we did that contest. Anyway, uh, we are gonna make this one interactive, like the last one or two that we did, and let people actually mic up. And we got Corey in here, and he wanted to talk to us about this company, Open. So, Corey, if you would like to do that, the floor is yours, good sir.
Good morning, morning.
Good morning.
Yeah, I heard about Open a couple of weeks ago. Uh, I'd say maybe a month and a half,
Okay.
and I mean, it kind of seemed like a meme stock. It kind of still does, but after they replaced the new CEO, the old CEO from Shopify, the retail sentiment is pretty good now. Uh, and it was like I'd say a couple of months ago, probably 6 months ago. Uh, they're saying that it's gonna hit $82, right? That's pretty far from where it's at right now.
Yeah.
It can't just be false hope, you know.
Is this
So
Open
we'll
Door
still be
Technologies?
yes, that's the stock right there.
Okay, okay. Keep going. I'm
Yeah,
sorry.
yeah, that's a big hope from now. But I'm gonna chance it, right? I have $2,000 in the stock. I bought it a while ago, and I sold it at $5, and I got it again at $9 and something cents. But it's just mixed feelings about it. The weekly chart looks terrible to me. Unlike how it looks on the weekly, it's overbought, but on the daily, it's not that bad. 2 hours, it's not that bad.
Okay.
And the news people on Wall Street still thinks it's a meme stock. I partially think it's one, but let's see. The CEO, the COO, and those guys that are high in the company, they say it's pretty good. And I think Eric Johnson, he's on the board, and he's going to talk to Eric Trump on Monday. So that will be good, a good momentum for the stock in the next couple of days into the next couple of weeks. Uh, uh, I I really think it's gonna hit like $15, and I don't know about 82, but 15, 25, they're about it's possible.
We got a question about Klarna. We can go into that one real quick. After this. I was gonna ask you about Open Door Technologies. I see they buy, sell, and trade residential properties online. Um,
Yeah, that's what I don't like. That's the thing I don't like about them, right? Because you know, the housing market tends to crash a lot. It's all about interest rates, and if you're buying a property, hold on to the property. This is their old method of making money, was to buy the property, fix the property, and sell it. But their inventory was pretty huge because they have so many houses, and you know they're unable to sell the houses. So I know their new business model right now is to find a house that someone wants, and it's like the middleman to. All right, so they go on their website, they list a house as selling, and because you bought the house from using their website, they get a commission. It's not like a realtor kind of. So that's their new business model versus the old one. So it
okay,
eliminates the possibility of losing gains from holding onto houses over time.
okay. Yeah, I looked at that and I was like, online. That's kind of weird. Um, but yeah, the housing market. Yeah, I don't know if the Feds are going to drop the rates. They're saying half a point or a whole point. We'll just have to see. Um, so buying and selling and trading real estate, obviously there's a use case for that there. I would ask, I have questions before I go to invest in a company. Is there a use case for it? When you just say buying, selling, and trading of residential properties, yes. But when you say online, I don't know so much, right? What does that mean? Online. How do they go about that?
So to my knowledge, at least, right? A list of property that's being sold. For example, John walked up to Open Doors like, "Hey, I have this house I need to sell." Okay, I know that you're selling the house, and then they list the house on their website. And then, some people who know about Open Doors, similar to Zillow, they go on the website and like, okay, I like this house, let's buy it. Now you sign an agreement where you pay both Open Door and the seller. Open Door gets a commission from selling the house.
Okay, I see.
Apparently, that's their new business model.
Is this similar to wholesaling real estate?
Yes, it should be. It sounds similar to me, so I'd assume so.
Uh, okay. The next question I ask is: Are they the number one in the space? Are they the number one in the space? What or I guess you could couple that with: Are there any other companies that are like them? Well, I guess that would be the
You have
follow-on
OPAD.
question because I would ask: Are they the number one in the space? And or the follow-on question would be, what other companies are like them, and what is the hedge they have on those other companies?
Right, so you have OPAD is the number one competitor, I think. Uh, but it's just based off how many persons I see online talking about it, right? So everyone seems optimistic about Open. I've never heard them talk about OPAD. OPAD's chart doesn't look really that good either. But you know, just taking the risk on Open Door.
Okay.
So little knowledge I know as of today.
So what do they have a moat around them? Are they like untouchable by any other company? Are they I don't know, are they what edge do they have on other companies?
I guess their inventory and market cap.
They do have a solid market cap. I see that 6.66 billion down there. That market cap is I saw that. I actually highlighted it down here. It's still highlighted. I think it mostly just grays it out. I don't. That's what it looks like on. Okay, there we go. Well, okay, and what are the new innovations to this company? What's going to keep them ahead? I don't even know if they are ahead. That's what I'm getting at. Like, are they more like a Zillow or Redfin or something like that? What's going to put them ahead and or keep them ahead of other companies? See, I can. These are all the questions I ask before I invest in it, and definitely the questions I have to have answered before I typically will ask other people to invest in it. Because if we just say like Nike, everybody knows Nike is a home, a name brand that is a household name, right? And we say Nike, 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 Nike. When we buy shoes, they have to be Nike. It's got to be Jordans. It's got to be something affiliated with Nike. But then if we just start looking at Nike's chart for the since January, Nike's chart since the last year, Nike's chart for the last 5 years, obviously the max chart is going to be up. But if we look at Nike, the peak of Nike was 2020 and 2021. So it was during COVID time frame, right? That's when Nike was at its absolute peak. Look at this chart. There's no other time in history where Nike had even been relatively that high. Shutting everybody inside. We know what happened. Everybody was inside on the couch. Everybody was watching TV. Everybody was bored, so they're buying stuff, right? So now Nike's falling back off, and you have all these other shoe brands out here who are also they caught on to their business model, so they're also making t-shirts, they're also making hoodies, they're also making sweats, they're also they're also and they're doing it through e-commerce. Nike has stores and outlets and factories where they have to pay for the lights and the water and internet and stuff like that. A lot of other people are doing it through e-commerce, so they don't have the amount of overhead of Nike. So I just look at that. I don't tell people to invest in Nike because of that. Even with its $107 billion market cap, I don't tell people to invest in Nike. I think Nike's uninvestable from my standpoint. So that's why I'm asking you that question.
Uh, I normally use like Chat GPT to do some analysis as well. So I asked a question where run a full financial and fundamental analysis on open stock, compare financial statements, professional analysis, retail sentiment, technical indicators, big contracts or deals. What is the revenue model, long term vision? What is the long term thesis, the bear case, likelihood of success, give potential price targets within the next 6 to 12 months, bull and bear case. So it's a long thing to read, but if you want to hear, I'll give you, I'll just, read it.
Okay. All right. So Open Door Technologies. That's that one. Let me look at Klarna because that one was asked about as well. Klarna, I know about a little bit because my wife has this spin class that she does, and she's got this active and fit like membership that allows us to use different gyms and stuff like that. And they use the Klarna app, and I noticed the Klarna app has a lot of different stuff on there. Um, I only know that much about them. So I don't really know what they do. Let's see. They're an AI powered
Um,
payments and commerce network. Go ahead.
Rich Tech Robotics.
No, never heard of it.
Uh, I recommend looking at that as well.
Throw it in the chat real quick, and I'll look at
Did you
this
say
company,
did,
and then I'll look that one up from the chat after this one.
did you say Miso Robotics, as in the restaurant kind of helper company?
No, Rich Tech Technologies,
No,
Rich
I haven't.
Tech Robotics.
Yeah, you came alive
Let
on that
me.
one. What do you know about this other one you're talking about?
All right, so they did some deals with Mercedes. It's like a robotics company.
No, I'm sorry, I meant
The main
Ramza.
competitors would be. Oh, sorry, my bad.
No, you're
Go
good.
ahead.
You're good. I meant him though. He said miso or something like that. This one, Klarna just IPO'd September 10th. Wow, it just IPO'd the other day at $40. I was like, I don't remember this one, and that's why. It IPO'd 3 days ago, and went up to 45, came back down to 42.90, where it's sitting right now. Um, I don't know. I don't know what to say about this one. I think it's too new for me to really have a read on, because it's just a they don't even have any like financials for you to really look at, because they haven't done an earnings call yet, right? Yeah, they have a PE ratio and all this stuff is filled out, but um you really have to be time tested against the market, to be honest, um to see how you're gonna do. And I think there are other payments and commerce network. You have PayPal. I'm guessing that would be in their arena. And why would people use Klarna if they're using PayPal? I don't know what kind of. I don't understand what it's saying exactly. What kind of companies would be like it, if that makes sense. So I don't. I wouldn't invest in this yet.
Uh,
They just IPO. Go ahead. Sorry.
I don't know. I think IPOs of themselves is just a bad investment at the launch, because they still raise capital to spend the capital in order to make the revenue later on in the coming years or coming months. So
So yeah,
tends to fall most of the time.
you're exactly right. But do you know why?
Why what?
Why
Uh,
the IPO? I'm asking him now. I know you know this, but I'll let you answer it. But Corey, do you know why when they IPO they typically fall?
because they spend the money they do their own investments.
Curtis, you want to answer that one?
I can speak for some of the ones that I've looked into. Like, for example, we invested in Boxable
Hmm.
at a very low cost of 80 cents per share. When it IPOs at $10 per share, I plan on pulling my money out, because I did the initial investment to give them the seed money so that they could IPO at a higher number, so that I could walk away with 10 times the amount in profit. So that's what I think he's going to get at a little bit, is that all the initial investors who bought in early want their money out of it. So when it IPOs, what I've noticed is there's typically a trend where it'll IPO, the price will shoot up just a little bit, 20, maybe even 30%, and then you'll see a deep dip. And I believe that's because all the initial investors pre-IPO pulled their money out.
That is correct. That is
I
what
see.
happens.
I see.
That is correct. If you look at my screen over here, though, I was right. PayPal. I didn't go too far down the road because I had some other companies I was going to name, but I wasn't sure what kind of company Klarna was, so I didn't want to say too much. But Google Pay is on here and PayPal is on here. So if you stop right there, they have steep, steep competition. This is going to be a very, very steep climb for them. Even Square Point of Sale, right? Stripe is another one I've heard of. The rest of these I really haven't heard of. That Venmo. I don't know how I missed that one, but they have steep, steep competition. I'm not saying they couldn't do well And Affirm as well with the new layaway model that they have. Yeah, I'm not. Affirm hadn't been doing too well. I had Affirm at one point in time, and I lost money on it. I pulled out of it. It may have come back, but I'm just saying they have steep competition. There's definitely no moat around Klarna, being that they're the new kid on the block, and they're gonna have to be time tested, mother approved. You know what I mean? Let's see if they can stand the test of time. 6 months, let's look at it again, because they'll do two earnings calls at that point, and so their CEO and CFO will have to get up in front of people and talk about how the company did, their financial sheet, how much money they have tucked away, and their plan for the future, innovation. Um, just too new. That's all. Anybody else have a company they want to talk about?
No, I wanted to harp on the one you just mentioned. I'd be interested in seeing their P&E, like their earnings ratio to see if they're actually profitable, because a lot of companies operate out of debt when they first become businesses. But if they've already built up their finances to the point where they're profitable immediately upon the initial public offering or IPO, they could be someone to look at. But from the history of knowing how IPOs typically go, I would honestly wait for the huge sell-off that I anticipate is going to happen. And if I were to buy in, I would wait until that number stops dropping so much, until the stock stops being so volatile. And then once it hits that rock bottom, whatever that's going to be, and stabilizes, that's when I would consider buying in, because from there, if they're going to succeed, that will be the new floor. That will be its new probably 52-week low, or within $1 or so of it. Like if we went from $40 to $10, I'd be looking for $1 for it to stay within $1 or two within a month, like a good month's time span or 2 months time span. And to me, that would be the new rock bottom for it. So I would buy somewhere in that range, so that we know the volatility is kind of still low, so that you can kind of determine, hey, if it takes a dip, how volatile am I going to lose $5 or just a couple of cents here and there? So any stock that I look at buying IPO, that's what I kind of look for before. And I look at historical data, and I use chat and other AIs too. I use the historical data to help. Hey, these top 5 stocks, or the top 20 IPOs this year, how have they performed? And then I look at the market sector that they're in as well. Are they in, like you guys were talking about, are they in the housing sector? Because their volatility means something different than if they're in the technology sector. If you're in the technology sector and you're dipping, a dip to that could be 2, 5, maybe even 10%, whereas the housing sector's volatility could be a lot more prone to loss at a higher percentage. So all those factors mean something to me before I go and buy. But I love hearing what you guys have found, because it gives me time to look into them, and it gives us time to share ideas. So thank you all.
Yeah. Additionally,
You
on
can look in the
that
rich
too.
tech right here.
What's up?
I was saying, based on what you were saying, case in point to rich tech right there, where it shot up after IPO and then
Yeah.
went straight down to like $0.
I guess
I
we were
bought it at
both.
$1.90.
Oh
Yeah.
shoot.
Yeah. It shot up to $8. So this one hasn't been around that long either. This one's been around for about 2 years, almost 2 years. And what I was gonna say on what Curtis was saying before about the whole Boxable thing, I'm gonna tell you right now, Boxable might follow that same trend of go up and take a leap off a cliff. I think it has a lower percent chance of doing that, only because of the IPO price. So each share pre IPO was 80 cents. But when it IPOs, its initial public offering, because people may see this, and one thing I couldn't stand when I first watched Earn Your Leisure, and it wasn't their fault. It was my fault. I had no investment financial literacy at all. So I didn't know all these acronyms, these three-letter word or whatever that they were using. I didn't know what it meant. So I'm going to throw that in there, not for y'all that are on the Discord, but for YouTube, right? Initial public offering, when it becomes a publicly traded company and the average Joe can now start buying shares. However, we do need to know IPO, right? I just broke down what it meant. We do need to utilize the same terminology other people utilize, but just for argument's sake. Anyway, I think because it only IPO'd at $10, there's less of a chance that it's going to do that. If it IPO'd at like $40, oh, absolutely. Absolutely. I mean, think about it, right? Just do the math really quickly on let me see. Let me pull this calculator. I think y'all can see this one, right? Yeah, y'all can see this. So if you do the math on a $40 IPO, that is $39.20 worth of equity. I mean, even if you only bought 1,000 shares, that's 39 grand. Yeah, they're gonna sell out. But let's say they did what I did, and bought 8,000 shares. Do you see that number? Yeah, they're gonna sell out. They're gonna cash in those chips and they're gonna take their ball and go home. Absolutely. And you know what they'll do? Hopefully, if they're smart, they're gonna take that money and then wait for a drop in the market, and they're gonna buy something like I would, like Nvidia. I wait for a drop in Nvidia, a precipitous drop. But this right here is very indicative of what I was saying before. Long time ago. This is why I invest in great companies. Companies I know are going to stand the test of time. And you have Nvidia, Amazon, Microsoft, even Palantir has now come in, and they have a great use case and government contracting and stuff like that. And Palantir is going to do great. I stick to the companies that I know are leading the way. I can't think of the Tesla is another one. Most of my investments right now are in tech because I see substantial growth. I mean, phenomenal growth in those shares. And see, if we're going to get real, one thing I will tell you is I joined the Navy in a lot of debt, right? I had student loans, Sally Mae chasing me in my sleep. I had a lot of, I had a T-Mobile bill in collections. It was like $258. I had, I think $1,800 I owed on a $1,500 credit card and from Bank of America, and it was already closed. I'm a client of theirs again. I'm back. But I was in a lot of debt when I joined. I had a repossessed car that was worth $13,000. They sold it at an auction for $9 grand. I owed $4,000 and something on it left. So, and for an E3 salary, that's not a whole lot of money left over if you're diligently paying your bills. And so I wasn't stacking. I was definitely not maxing out my IRA. And so in an effort to catch up and make up for time lost, I don't want to go with good companies and good 10% growth a year. No. I need 30% and up. And it just God be the glory, you know, that I found some companies that were able to help me catch up a lot faster. Even Robinhood, I didn't mention them, but y'all know already over here, this is the MVP of my portfolio. I've had them since 2021 when they IPO'd. But look at the growth I got in the past year. See that? That's going to help me catch up. With these amount of shares, that's going to help me catch up. And guess what? I'm never selling the shares. Not happening. I did sell 100 of them recently this year, but that's because I was borrowing on margin, and I wanted to give some of the margin back. So I made some money off of it, but I sold it and gave them back some of their margin. Um, but I'm not selling the shares. I'm gonna keep the shares because um, I think the company is gonna forever go up. And so for me, you won't see me experimenting with new companies all that much. Like these quantum computer stocks, quantum computing and AI are gonna take over. I'm telling you now. So if your companies that you're looking to invest in are not moving in those directions, you need to ask yourself why, or get on one of these earning calls. Better yet, and ask the CEOs and the CFOs why. If you're an investor, then you're part owner in that company. And I think you have a IONQ. Yeah, I know, I heard of that one. We'll look at those charts in just a sec. Um, you need to be concerned with why they're not invested into AI or into quantum computing, because just about everything, again, saying this stuff is the future is gonna leave you broken, desolate. It's the right now, and companies are gonna be left behind. All that would take in another year or two. Give it another 3 years of expanding, and you're going to see companies shut their doors for the last time for lack of utilizing AI. A lack of utilizing what is the now, and I'm talking about, I don't care what time in history you talk about. Let's say, imagine you have to feed the village with fish, right? And your village is 20 people. You and the guys go out to the shores with fishing poles, and you can feed the village every day with a couple of fish to supplement what the hunters are bringing in with deer and all of that. You could do that. Great. Now, let's invent some boats, right? You fish all the fish away from the shore after a while. Now you got to launch out into the deep, right? Or you got to launch out past the shores. The ones that's still fishing on the shores aren't going to catch anything. There's no fish there. So now you get in the boat and you go further out to go catch some stuff, right? Now you can feed the village. It's grew to like 50 people. Now you bring in more fish. Now you get a bigger boat. Those become the now. And they invent nets, because now you have a village of 200 people and you're still trying to fish from the shores. You're not going to feed anybody other than your family if you catch anything. And that's my point. Any point in time where new technology is the now and you're still using yesteryears or two versions earlier technology or whatnot, give it another couple years and you're going to be left broke and desolate, because what's going to end up happening is you're just going to get left behind. There, AI is powering stuff and flying through things you couldn't even imagine. And honestly, partially jobs are going to be replaced by AI, but the other part is going to be the guy or gal who knows how to actually program and talk to AI. You're going to have software engineers out of jobs. Um, I mean, we have a brother, Curtis and I, that works at Amazon, and he's already talking about Amazon using those bots to get boxes off the shelves and stuff like that. Unskilled labor for sure is going to be even more replaced than they were when we had factories, when Chevrolet and Ford and GMC, and let's do one some of y'all Zennials ain't never heard of, like Mercury. Mercury, they had factories in Saturn, and people were putting the cars together off of conveyor belts. Robotics came and took those jobs. And but the guy who knew how to program and or fix the robotics, repair it, still had jobs. You were going to say something? Good, sir?
Yeah, but I was going to be sarcastic and say, the robots don't need breaks. They don't need labor law. They don't need unions. They don't. So if you have a job, like he was saying, that can be overtaken buy something that over time has a lower overhead cost, then yeah, you're in the realm for being able to be replaced because now they don't have to shell out so much. Once they can streamline their processes, it's going to be a lot of upfront costs, but companies project for 5, 10, 15, 20 years down the road in the future. So just like he was saying, I work in the tech sector, and a lot of places are looking for people with technical knowledge, but with some or moderate programming knowledge, with some or moderate what they call DevOps, which is being able to use programs to launch other applications and make programs talk to each other with API, which is a somewhat of an application programmable interface, which is where you have two different programs talking to each other. So if I have and I talk about this a lot, if I have Robinhood, for example, and I want an AI to be able to predict moves in the stock market, and then I want that AI to be programmable to automatically trade for me using my Robinhood credentials, I have to create an API that can that is basically a connection between the AI and the trading platform to say, hey, when you do this string of code, it's going to execute buying this particular stock and this particular thing and this much of it. And you're essentially creating a translator between one program and another so it can understand, hey, if I do this, this is how it affects that program. They want people already in that industry. Even in some of their entry level jobs, they're asking for you to have programming experience or AI experience. So he's absolutely on the money. Anytime there's a new technology invented that can revolutionize the space, you're still going to see your mom and pop shops out there, and they are going to still be able to operate in a smaller capacity, but they're not going to reach the audience at the same level as your big companies that use the technology to get the results. That's it.
Yeah. Good point. That's a lot of good information being passed in here every Saturday, man. And I do appreciate. I think I do like the show model where we put um I think I like the show model better where we put the mics on and we just put a topic on the table and people actually chime in on what they do or don't know about it. So I think we may go ahead and your voice dropped out. You didn't drop out. I think we may go ahead and actually move to that model on Saturdays, but we're going to need dedicated people in here. And see, when I started doing the Discord lives, it was just me on here. So it was a lot easier to bet that I was going to be here, right? Consistency. So if we look at IonQ, the past year's growth has been insane in the membrane. I mean, good God Almighty. That is, this company have come in and smoked off a lot of them. It IPO'd at $11 and something, but in 5 years it's got 400% growth. But in 1 year it's got 600. That's because I think it was lower. Yeah, it was lower. It was down to $8. But all right, folks. I think that's been a good show. I am going to have to get rolling here, but I thank y'all for coming in and sharing. And we will be back next week. And let's put some topics on the table that y'all think people might want to hear about. Like one of them with the unfortunate, I guess, assassination of Charlie Kirk, I was going to rehash was going to be life insurance. Term, whole, universal, and compare. I think there's another one. I might have hit them all, but I think there may be another one. But and why you need that, because it's not just to cover funeral costs, but it's also supposed to be. I mean, smart would be have enough life insurance to cover funeral costs. Um, Wise would be to not just cover funeral costs, but cover future earnings. as well. And I would say a good starter point would be cover at least 3 to 5 years worth of earnings. I'd say five. Let's not do three. Let's say five. And that may sound like a lot, but if you really think about it, if you count on that person's earnings every month, every year, then if you had life insurance enough to cover their funeral costs, and with funeral costs, remember, people may not be able to fly out. You may have to buy tickets for buses, planes, hotels, accommodations. There's other costs with funerals, but then also 5 years worth of earnings, because if that person passes away, and let's say you have a homemaker that does not have a degree, or does not have like hard skills, 5 years worth of earnings gives them a chance to go to college or go to technical schools and learn that, and plus get a job and start working their way up before they go critical and actually need that money replaced. And of course, the more income years you can replace, the better the life insurance, right? Until you get into the realm of where, okay, now I just created generational wealth for grandkids and stuff. But most people aren't there yet. So, anyway, folks, thank you for joining and thank you for being here. The forge is going to go cold, and I will see you next Saturday. Y'all enjoy your weekend and have a good day.